Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York. It is Tuesday, May 30th, 2017, and this is the Daily Report for Gold and Silver. We do have a mixed bag in the precious metals markets today, with gold and platinum trading lower on the day, silver and palladium trading higher. First to gold, currently trading under pressure, down about $6, $6.30. That's our current print, 610, down about 0.5% on the day at 1262. It is traded to a low of 58.40 and a high today of 1270. In terms of August gold, which is where our current position is, August gold is currently trading at 1265.80. It's a little bit above our price point or entry point on our current trade. Over to silver. Silver is showing some nice gains on the day, up about 7 cents at 1739.5. It's traded to a low of 1720 and a high today of 1746. Of course, we are also long silver in our current portfolio. So traders, with today's moderate sell-off in gold, the real question is have we seen any kind of chart damage, and what are we looking at over the next couple of days? And to answer that question, I've pulled up our daily chart, standard candlestick format, and there's a couple of things that we certainly want to draw our attention to. First of all, we talked about the fact that we had a defined breakout coming in at the end of last week. That would have been Friday's activity when we broke above this long-standing resistance line. Now we didn't get the follow-through that I had hoped we would see come Tuesday. And so what we really want to follow are two distinct technical studies to indicate whether or not this market's going to begin to backslide and fall back, or if we're just seeing some consolidation at this new price point. And to that end, I want to look at two things. The first thing, of course, is going to be our short-term or 50-day moving average. And as long as we are trading above that 50-day average, I feel pretty solid about the fact that we are still in some sort of a bullish mode after dealing with this sideways trading activity for last week, and actually the better part of almost 2 trading weeks in terms of activity. The second thing that I think we want to focus upon is going to be a trend line that we would create from this compression triangle, but simply extend that. And by doing that, we should have an area where, as long as we're above this particular line here, we should have some solid support in the market. If, in fact, though, we do see the market break below the 50-day moving average or break below this trend line, that would be a good time to take our current stop to the market and either pull small profits or take a small loss on the gold trade. And traders, as far as our current silver trade goes, of course, silver has been trading in a world of its own, obviously trading to a different drummer, so to speak. When we look at our current silver trade in silver vis-a-vis this daily candlestick chart, we can see that the 50-day and the 200-day, 50-day being this lower, 200-day being the yellow and above, we haven't gotten a price point that's actually pushed into that. So we haven't had that confirmation, meaning a break above our 50-day moving average. But traders, look at the high today. The high came just at the 50-day moving average and began to back off. And so that tells me that at least on a minimal level, there is some resistance at this particular price point, and that would come in right around the highs at about 1747. Want to see how the market reacts here. Of course, any underlying weakness in gold could push silver down, but we do see silver trading to different parameters. In terms of support, I am pegging support right now roughly at 1710, here 1712, so right in this area. This would be the zone that I would want us to move our stops up to and have our profit locked in on our current trade. Of course, we got in much below that, what, at around 1636. When we do raise our stops up, or if you want to on your own, silver traders, I am recommending that you move your stop from where it currently is to below 1710. In other markets that we look at, first wanted to take a quick look at the dollar. Dollar under pressure, but obviously not supportive enough to add any kind of upside momentum to gold, with gold still trading lower in spite of a dollar trading off about 0.2% at 97.18. Over to the equities markets, we did have slightly lower pricing pretty much across the board. 0.25% lower in the Dow Jones Industrials, trading off about 50 points on the day. Standard & Poor's off about 0.1% at 2412. And then the NASDAQ Composite also off about 0.1% at 6203. So it seems the overall characteristic in today's market action, both in the precious metals as well as the dollar and equities, are across the board lower pricing. Interesting day in U.S. equities as we have seen them trade under modest pressure, very modest pressure, with both the composite, NASDAQ Composite, and the Standard & Poor's trading off by approximately 0.1%. Not a great drawdown to any extent. A Dow Jones off about 0.25%. Now, in light of that, when we look at our current daily chart from the NASDAQ, you can see that over the last couple of trading days, we can see it has been characterized by these extremely small bodied candles. We've seen this before, and that tends to come in when a market is consolidating. We got that right in here. We also got that right here. So the fact that the market is consolidating before pressing on to higher pricing or before taking some sort of a corrective action, there's a lot going on right now in Washington that has created a greater degree, I should say, of uncertainty, and that is really being reflected, I believe, in the U.S. equities markets. And traders, lastly, I do want to take a look at the dollar index. A dollar index trading lower today, off about 0.2% at 97.15. But what I find most fascinating about today's activity is the fact that we have gotten confirmation that our shorter term moving average, this being our 50-day moving average, has now crossed below our longer term 200-day moving average. And just like we identified a golden cross that occurred in gold, this is simply called a dead cross, in which the shorter term moves below the longer term moving average. And again, we're using these large data sets of 50-day and 200-day moving averages, so that could be indicating the potential for lower pricing ahead in the U.S. dollar index. Traders, given that we have a very, very short trading week, of course, first day of the trading week is today, Tuesday, so we've got a shortened trading week. We also have the jobs report, which will come out on Friday. Anticipation is a pretty strong report with 210,000 new jobs added in May. So based upon the early estimates of this report, we could see some underlying pressure continue modestly throughout the week as we go into the report. Of course, once the report comes out, if it comes out at expectation, or at estimates, I should say, what we will be looking at is the fact that going into the week, prices had attempted to factor that number into current pricing. However, if it comes in higher or lower, dramatically higher or lower than estimates, we could see a spike in the precious metals markets one way or the other, depending on how that report comes in. However, for right now, my recommendation is to maintain your current long position in gold and stop. Maintain your current long position in silver and stop. We will look to tighten these stops up probably within the next 48 hours. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.